Guillermo Co is a medium-sized company that manufactures a single product. The product should take 2 days to manufacture. Figures from its most recent financial statements are as revenue, raw material inventory, work in progress inventory, finished goods inventory. Credit sales account for 75% of the total revenue, and Guillermo's gross profit margin is 60%. Guillermo has a large number of credit customers, but there is no separate credit control function, and chasing of overdue debts is left to the relevant customer account manager. The finance manager considers this to be satisfactory to enable the finance department concentrate on more important aspects of the business. Standard credit terms for credit customers is 30 days, and no credit accounts are currently suspended. All customer account managers are paid a bonus based on the level of sales achieved. Purchases. Raw material purchases in the year total 2,160,000 and 90% was purchased on credit. Raw material is the only supplier Guillermo purchases on credit. Guillermo has always tried to maintain good supplier relations, and the average credit term from suppliers is 35 days. Cash management. The management of Guillermo has decided it wishes the minimum cash balance to be $40,000, but the cash balance is volatile with a standard deviation of $15,000. If extra cash is needed, then Guillermo will sell tradable securities from an investment portfolio that it owns. The transaction cost per purchase is the same as a sale at $55 per transaction. Interest rates are currently 9% per year, assume 360 days. Calculate the cash operating cycle of Ultramo. So to calculate the cash operating cycle, what do we need? We need the receivable days, inventory days, and payable days. Let's start with the receivable days. So what do we need first? We need the credit sales amount. So credit sales is equals to what's wrong with this? So 75% of the total revenue is on credit. So 6,000 into 75. So let's write down a note. All figures are in thousands. Okay. Then receivable days is receivables over credit sales multiplied by 360. So pretty straightforward calculation. Receivable days is 68 days. Next, payable days. So we need the credit purchase. So credit purchases are equals to 90% of the total purchase. So that is 2,160 to 90%. Payable days equals payables of 162 divided by credit purchase multiplied by 360. That is 30 days. Next, inventory. So now with regards to inventory, you have raw material days, work in progress days, and finished goods days. So let's write down a topic, inventory days. So how do you calculate the, let's start with raw material days. Raw material inventory divided by raw material purchase. So raw material days, so raw material inventory is given as 120 divided by the usage. But in this situation, we have the purchase. Therefore, we can take the purchases. Okay. What is the purchases? To 160 multiplied by 360. 20 days. Okay, so before that, better if we have something called, if we do the cost of sale calculation. So cost of sales. So what have they given? They have known that the profit margin is 60%. So revenue is 6,000 equals to 100. If margin is equals to 60%, that means your cost should be equals to 40. So cost of sales is 2,400. Next, work in progress days. So work in progress days is your work in progress inventory divided by the production cost. If production cost is not given, you can take the cost of sales. So raw material work in progress inventory is 20 divided by the cost of sales multiplied by 360. 3 days, very low. 3 days. Next, finished goods is again finished goods inventory 80 divided by the cost of sales multiplied by 360. 12 days. Total inventory days is equals to 20 plus 3 plus 12. Then your cash operating cycle, receivable days, inventory days, payable is cash operating cycle 73. It's very simple calculation, just a little bit time consuming. Is this clear? Cash operating cycle is clear? Okay. Then let's move on. Discuss 3 ways in which Guillermo could reduce its cash operating cycle. 3 ways to reduce the cash operating cycle. Give me 3 ways. Reduce receivable. No. Reducing receivable takes time. If you say reduce receivable, it's wrong. Even if you reduce receivable, certain times receivable dates might not change. Directly, what is the answer you should say? Reducing the receivable days. So the first one we can say reducing receivable days, or we can say improving credit control. So Guillermo Co currently has uh, let's say Guillermo Co takes 68 days to collect cash from its customers. So, guys, is this a problem? Us taking 68 days? Is it a problem? If it's a problem, then why it's a problem? Why is it a problem? Finance cost? No, that is not the problem. Why is it a problem? Because the standard credit terms are 30 days. That's why it's a problem. That's the reason. Our standard, our what is the agreement with the customer? Our agreement is customer will sell you goods on credit, but you have to make the payment within 30 days. But customers are taking more than twice the amount of time. What does that mean? Our credit control function is not good. We are not collecting the cash from the customer. We are not chasing the debt. It's a big problem. So we can write down this is twice that of the standard credit terms of 30 days. This shows that the credit control function of is very weak, particularly with regards collecting the cash from customers. Now, what is the solution for this? What is the solution? What is the solution? Calling. Now, collect one pay. If the customers are not making the payment, you have to call them, yes. But that is for specific customer. I am saying now this credit control function itself is wrong. This credit control function has goal is the problem. How do we improve this? The answer which you are giving should be specific towards the company. You should identify where the company is making the mistake and give the solution. You can't just give generic random solutions. If you write answer, you are not going to get marks. So with regards to this company, with regards to Guillermo Co, give me the answer. How do they improve their credit control function? Punishment discount factoring. No, 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 wrong, wrong, wrong. Early discount and factoring are two methods of advancing the receivables, or else getting the customers to pay quickly. That is not a method of improving the credit control. So, guys, what is the problem here? The problem is that customers are taking 68 days. Okay. Why are they taking 68 days? Because there is no separate credit control function. That is the reason. And who is responsible for chasing the debt? The relevant customer account manager. That is the reason for the problem. So that the specific problem is given for you in the case. In the question itself, the problem is given for this problem, you have to simply give a solution. The problem is there is no specific or no separate credit control function. Therefore, what is the solution? Solution should be the good removal should establish a separate credit control function. This is likely due to the fact that does not have a separate credit control function and chasing of the debts is left to government customer account manager, who most likely does not have an idea, any idea how to collect debts and would rather focus sales. Therefore, either establish a separate all function, manage these events, else the finance department each receivables and basis by long-standing debts, customers, take whatever necessary action. Okay, fine. So, this is your answer for the first one. Okay, the first way to reduce the cash operating cycle. Okay, so guys, remember when I'm writing the answer which I'm writing is a very almost perfect answer. An answer which is, definitely if you write this type of answer, you are going to get that 2 marks. For each point, they ask 3 ways. For each method which you are giving, it's carrying 2 marks. So I have written for little bit more than 2 marks. That's because I like to achieve perfection. So I want you all also to write answers to this standard or to this level. Okay, so although you don't have to, write it exactly how I have written, but if the points are given, if you have mentioned, okay, what is the problem? Problem is we are taking 68 days. Why? What is the reason for the problem? We don't have separate credit control function. What is the solution? Establish separate credit control function. If this is mentioned, then enough. Okay, so tell me what is the second method or the second way in order to reduce the cash operating cycle? Increasing payables. So if you increase the payable, supplier will be disappointed, no? How can you say that's a, oh, give me the justification for that. How can you say that is possible? If you increase the payable days, you will disappoint the suppliers, no? Won't they get disappointed? Won't you lose supplier goodwill? How can you increase payable days? Tell me. Explain. Wrong with wrong answers up front. Guillermo currently takes 30 days to pay its suppliers, but its suppliers provide the company a 35-day credit period. It should be answer. What are they saying? Our credit term from our suppliers 35 days, but are taking 30 days to make the payment. So therefore, we can delay the payment by 5 days. So if you pay it within 35 days, can your supplier be disappointed? Can you be supplier will no, they will be happy actually. You are paying on time. Right now you are paying early. So what does that mean? This shows that the company is not taking advantage of the available credit. Okay. Paying suppliers earlier would lengthen the cash operating cycle and will also result in higher working capital financing. Therefore, Rome should take advantage of the free credit pay within 35 days, which is still acceptable in suppliers. This is your second point. This is your second point. What is your third? What's your third point, guys? What's your third point? What can we write for the third point? Reduce inventory days. Now, inside inventory days, we have three different kinds of inventory. So if you are just generally giving a statement reduce inventory days, that's wrong. You have to be very specific within your answer. Now, if somebody is asking you now, you are asking me, sir, how to pass the exam? I am telling you study. That is not going to help you. I should give specific advice. Understood? So give me some specific advice. Inside inventory days, what should we reduce? Is it raw material? Should we improve the work in progress? Reduce raw material. Is that reduce the raw material holding period. Guillermo currently holds the raw material for 20 days before starting the production process. This is a relatively long period of time. So what is the solution? Guillermo should reduce the raw material inventory holding period. Yes, but how should we reduce it? Therefore, should reduce its raw material multiplier, either by only ordering when raw material is required, thereby avoiding stocking large amounts of material, or else it could adopt a just-in-time system. Right? That- That's it. Requirement B. Is it clear, guys? Requirement B is okay. Shall we move on to the final requirement? I hope. No, there is two more requirements. Shall we move on to the next one? Yeah, all okay? Yes. Using the below model, calculate the target cash balance for Guillermo Co. Okay, below model. So, in order to use the below model, we need a couple of things. We need the daily variance, daily interest rate. So, what is the variance? Variance is standard deviation squared. So, 15,000 squared. Daily interest rate is 9% per year divided by 365. 0.02. So we are supposed to assume 360 days. Sorry, so if it's 360 days, that is 0.03. Now, what is the transaction cost? Is it given? 55. Sorry. So what is the spread? Spread is equals to 3 to your 4 multiplied by 55 into variance divided by daily interest rate to the power of 1 divided by 3. 100,070. Next, we have to calculate the target cash balance. So the target cash balance is another word or another term for the return point. Okay. So how do you calculate the return point? The return point is equals to the minimum cash balance plus one third of the rent. Lower limit 40,000 plus one third of the rent. So what is your return point? 73,359. That is your return point. Again, for 3 months, it's a very straightforward calculation. Is this clear? Next, final requirement for 6 months. Discuss the motives for a business to hold cash. Okay, well, very simple, guys. It's a piece of cake. Okay, what are the motives? There are three key reasons. There are three key reasons for a company to hold cash. Correct, Safran? First one being transaction motive. The second one being investment motive. The third one being precautionary. So transaction motive, what does that mean? This is the cash which is kept for the day-to-day operations, the day-to-day operations or the day-to-day expenses of the business. Okay. In order to run the business. Okay, so since this is a six marks question, so they have asked discuss the motives. We just basically discuss when they say discuss, they just the definition. But since it's a six marks question, let's just write down just to be on the safe side. You can write down a few examples. Example, the cash which is required, the suppliers, electricity bill, utility payments, and you can say wages and salaries, etc. Investment motive. What does that mean? This is the cash which you're keeping in order to take advantage of any investment opportunities which may occur. This is the cash which the company keeps in order to take advantage of any sudden investment opportunities which may occur and result in the company obtaining a return. Okay, that is the definition. Any examples? We can say, for example, in order to acquire a potential subsidiary, okay, we can say to purchase treasury bonds, to fixed deposits. So, precautionary motive. What do you mean by precautionary motive? Cash which you are keeping in case of an emergency. This is the cash which is kept in case of any unexpected expenses or cash outflows. Okay. For example, legal claims, mm, natural disasters, mm, or we can say warranty claims. So 6 marks. That very simple. Okay, easily you can get that 6 marks. Okay, guys, we are done with this question. We are done with the working capital area.